The greatest teacher is called doing, Kevin Kelly. That's what we encourage you to do every day. That is 10 to 15 minutes. Jump into this market, figure out what's going on, practice trade as often as you can. When you start thinking you're becoming a market master, you can do this in your sleep. That's when you switch over to fractional trading, and then you see what it's like to put a little bit of real money in the market and just how good you are. And my friends, commit yourself to this. You're going to do this the rest of your life. And if you start today, that means you're starting a day earlier than tomorrow. And wherever it takes you, however long it takes you, you'll get there sooner starting now. You can do this. Look at what we talk about every day. Go back and backtrack. See how accurate you can become with weekly vertical crossovers, 2-day recrosses, using all the charts all the time. And of course, our Patreon members, we send them 10 weekly vertical crossovers up and 10 down on the S&P 500 each and every week to practice trade all the time. So you want to get busy, get committed, jump into the fray. This is some fun stuff. Great training for all of these subscribers. You can do that for free. Go to chartingwealth.com, sign up. Fundamental analysis is fine, but don't be a dumb buyer. What do we mean by that? We mean that, yes, investing in good, solid companies that pay nice dividends each quarter is a great idea, but don't pay the wrong price. You know, when you go to buy a car, you can sure buy for the sticker price, but you know what? You can get a better deal if you know what you're doing and you shop around and you pay attention, in our case, to price flows, because the same stock, depending on when you buy it, may be able to be bought at a discount. So be smart. That's what fundamental analysis doesn't give you, is what is the real value? Where are things? The last thing you want to do is buy at a top. You don't want to buy when something's topping out and is crossing over, going down on our weekly chart. You just don't want to do it right then. Let it bottom out, buy it cheaper, and ride it up. And there's all sorts of more sophisticated things you can do with covered calls and reinvesting your dividends at the right times and all the other stuff we teach here. We're all about being smart, not being dumb buyers. Let's look at these charts. We see the S&P up a little bit, Nasdaq 100 down, 20-year bonds up, gold up, Bitcoin up. Let's start first with the S&P up a little bit. Now remember, we had a weekly vertical crossover back on the week ending the 9th, jumping in point somewhere around the 407 mark, high 420.72. This week, again, we're sitting right there on the weekly trend line. No need to wholesale panic. Maybe you already took your profits. Maybe you set your profit and loss bands. You bifurcated or trifurcated those things, took some profits. You're figuring out what to do with the rest. Again, all of this comes down to how much you practice, how much you study, what kind of experience you have in the S&P, and what makes sense to do. We do see some weakening. We see a red spinning top. It's an open box, not a closed box, so it's not that solid down movement. We see the price percent oscillator is positive, but is getting close to that red signal line. Derivative oscillator losing a little bit of energy. 2-day chart. Now this is where we see the problems tick in. We had a red spinning top back on the Monday, Tuesday, Wednesday, trying to cross over going down. What does that mean if you stay in long enough for that to close? You're done. You're absolutely done. We don't say stay in until the 2-day crosses over going down, but you know you're done at that point if you have a 2-day crossover going down on the price percent oscillator. Why? Because you're going to wait. If things start to go back up again, guess what you have happen? You have it cross back over. We call that a 2-day recross when the weekly is moving in the same position. That wasn't happening back when the 2-day crossed. But I'm saying if this occurs and then you see this happened over here around the 1st of April where the 2-day crosses back going in the same direction as the weekly. That's called the 2-day recross. you could potentially jump back in. Again, if everything makes sense. It's not a hard and fast rule. If it was a hard and fast rule, a computer would do this. You could have a monkey trained to figure this out. It's not that easy. That's why it takes the nuanced learning you get from 10 to 15 minutes a day forever. And it's fun. It's exciting. The fact that it doesn't work all the time is what makes it challenging for those of us who love this. You know, the fact that you don't win all the time makes it risky, and risk and reward are things that we enjoy. And again, risking is what makes this interesting. Now, that's where we are on the 2-day. What's up with the half day? Up in the morning and then pulling back some in the afternoon. Like we said, it was only up 0.03%. We see that half day is still down. Derivative oscillator gaining momentum. Price percent oscillator heading down. So again, perhaps this is coming to a close. We don't know that yet. We haven't seen the candle close. Remember, this current candle will close at 4 p.m. on Thursday. So again, could bounce up in the morning and hammer up quite nicely. So we'll watch and see. Let's go to the Qs. Of course, we had that big down day yesterday, a little bit of a down day today, down 0.34%. We do see right now, it's not the end of the week yet, still 2 days, but that price percent oscillator trying to pull away from the red signal line and head down. The derivative oscillator, which is still positive, losing momentum. Solid red spinning top, long wick on the bottom, little wick on top, thicker candle than we saw on the S&P, and a solid red one. We look at the 2-day and we can see strong red down candle with a crossover. We've already talked about that. That ends any hope that you had, continues to move down. Now, what might we see? Well, we again might see the makings of a weekly vertical crossover heading down by the end of the week. It's looking that way on the big chart, and we may just see these down candles stacking up on the intermediate chart, derivative oscillator gaining downward momentum. What do we see on the half day? Now, this shows us a little something. We hit the bottom, okay, in the recent down movement on Tuesday morning. Things bounded up a little bit on Wednesday morning and then down in the afternoon. So we were down some, but not to those prior lows. So we'll watch and see just how all this finishes off and just how big this red down candle is. And if indeed we end the week with a crossover on the weekly chart going down. So that's where we are on the Qs. Big pullback. Now let's go to 20-year bonds. What do we see going on there? We had that weekly vertical crossover at the end of this last week. Very tepid as the week moves on, but up for the day a little bit, 0.16%. What's nice is the price percent oscillator is pulling away from the red signal line. Derivative oscillators heading up. How about the 2-day? It's looking all right, not hitting a higher high than the prior 2-day candle the first day of this latest one, but it looks okay. Price is above the weekly. We'll redraw this 2-day trend line at some point. It's hard to draw much of anything worthwhile now. Derivative oscillator still positive, losing momentum. What about the half day? Well, we saw that cross over yesterday afternoon after a big bump up in the morning, bit of a loss, pullback in the afternoon, and then things down in the morning on Wednesday and then moving up Wednesday afternoon. So that's good to see. Still haven't reached the high that we reached on Tuesday, but moving in the right direction of the weekly vertical crossover and the price percent oscillator pulling away from the red signal line. So that's good to see. Let's go to gold. Now gold we had, let's make sure we start with the big chart. In gold, we had that weekly vertical crossover back a couple of weeks ago, the week ending the 23rd of April. And the nice thing was, what did we see happen at the same time? We saw the price percent oscillator flip over the red signal line going up, and we saw the derivative oscillator go from red to green. That is typically a good sign for continued movement. Lackluster week last week, but things looking nice this week. And again, our jumping in point, and it's hard to use. I admit it's hard to use the Heikin Ashis, but somewhere around 166.59 to a high of somewhere around 168.55. So we want to see that continue to move higher. It's nice to see price above that weekly trend line and the price percent oscillator pulling away. Look at the 2-day. It's heading up nicely. Derivative oscillator still losing some momentum. Red open box candle, that's showing a slowdown, but again, still making its way up, and that price percent oscillator, all importance, moving up. We need to redraw our trend line. That's not a great trend line, but it's probably about as good as we're going to get it right now. We'll continue to watch and see how things move. We look at the half-day. Hopefully, we'll see some more up movement in gold, and that half-day chart will cross over going up maybe tomorrow morning or afternoon. And at some point, we'll bound above the previous high on Monday. That was nice to get the week kicked off with some energy in gold after that last luster week, after the weekly vertical crossover last week. So let's go back to the weekly. And lastly, take a look at Bitcoin up for the day, almost 3%, 2.91. We have a green. I'm trying to see if it's hard to tell. It looks like there's just a wick on top, no wick on the bottom. So that's good to see. That's a decent candle with no down movement recorded there, if I'm seeing it correctly. However, derivative oscillator still gaining downward momentum. Price percent oscillator still heading down. Now the 2-day flattening some more. Derivative oscillator losing some momentum. Red spinning top forming. That again is better than a strong red down candle. Not as good as the prior green up candle. We'll continue to watch and see. Bitcoin's got a lot of ground to make up. We got to see this 2-day crossover and the weekly going up. What do we see on the half day? It's been going up since the 28th. We saw some confusion in the morning and then up movement in the afternoon. Some indecision in the morning and up movement in the afternoon. So that's good to see. We'll just continue to watch Bitcoin still have that overhang of the down movement on the weekly and the 2-day. That's where we are, folks, as we end the day midweek. We've just analyzed the 10 weekly vertical crossovers up, the 10 weekly vertical crossovers down. For our Patreon members, I'll be getting that out in a few minutes, give you some time to be able to get ready for potential weekly vertical crossover practice trades at the end of the week. These are all S&P stocks. So I hope that you enjoyed. You're interested in what we do for our Patreon members. We also had our live question and answer call-in session for them today. That has already been sent out to them, a recording of that. If you want to become a Patreon member and get all this good stuff I've just explained, plus our 3-part series on options made simple, the Charting Wealth Way, if you care about learning how options work and how to practice trade them, we've got you covered. That's just one of the many benefits that you get at any of our 3 levels of Patreon support. That's where we are, folks. God bless you. All the best from the whole team at Charting Wealth World Headquarters.